Hello, I'm Ion-Marc Valahu from Clairinvest. I'm the Chief Investment Officer, and today I'd like to talk about gold as it's making a new high. There are several factors, but surprisingly, they are not the factors that you would expect, being a lot of buying and a lot of institutional buying. In essence, as you can see from the graph, gold has been rallying very hard over the last year on a lot of factors, geopolitical, a lot of devaluations of currencies in the dollar and other currencies, the fact that a lot of the central banks are still printing a lot of money, also that the interest rates campaign by the Fed and the central bank has not really reduced inflation at this point, and we're seeing actually a resurgence of inflation in the last couple of numbers on the CPI and the PPI lately in the US. Europe is a little bit more stable, but it's still not back to the levels prior to COVID in 2020. So going back to the factors, what we are seeing is that the gold seems to be going higher on central bank buying, mainly central banks from emerging markets and also China, which has become a big buyer of gold of late. As you can see from here, we see the total exports of gold from Switzerland to China, and China has been buying huge amount, record amount of gold, and that's one of the factors. Also, emerging markets economies like India, which is actually growing a lot lately, has been on a nice economic boom. As also, as people get richer, they buy more gold. One thing I will point out is that the reason why emerging markets, China, India, South Africa are buying gold is that ever since the conflict between Russia and Ukraine and the US dollar was kind of weaponized because of the SWIFT, a lot of the countries around the world decided that they're a little bit scared to keep their deposits and their assets in the European or the US dollar. And so therefore, they're trying to circumvent in case there's an issue, and they want to keep their holdings in gold, which is always, they can always keep it and trade it if they need to. When we see that now Russia has a lot of assets that have been seized and they won't be able to get access to them for a very long time. So that's one of the major factors. But as you can see, that's very interesting. It's mostly central bank buying of gold that has driven the price of gold. So now, if we look at more of a technical picture, right now we are in a runaway move of sorts where a lot of people are not positioned into gold, except for, like I said, a lot of the countries and central banks. And we will see if now institutional investors and investors in general start to allocate assets to gold. And we will see now if in the next following months, if the central banks will hike again, potentially, instead of cutting rates as expected to fight off the resurging inflation numbers. Of course, there's always pullbacks for consolidation, but over the long term, I think that gold will benefit from a lot of occurrence, that it be geopolitical, that it be central bank buying, and potentially new investors coming in, and inflation, and also devaluation of currencies. I want to finish on this. A lot of the production, the big producers in the world, and as a reference, the biggest find of gold was found in the year 2000, and ever since, all the mines, we haven't found any major deposit of gold around the world. So there's also a potential for an upside in the gold prices, is that we pretty much have mined all the gold in the world, and so there's a limited amount of gold that we can find. And therefore, one of the possibilities is to go and recycle a lot of the products which hasn't been done, that the gold has been used to in the industrial sector, and that could be a new source of finding gold as a recycle mechanism. But as far as mines, I think we have pretty much found all the inventories or the deposits that the world can find, unless there's a big surprise. Well, that's it for today on the gold markets around the world. Thank you for watching, and happy trading.